How's it going? Welcome back. It's Jonathan. Now in this video, we're going to talk about the recent flash crash that's happened in Bitcoin, and also, was there any way that we could tell that the current level of Bitcoin around the 66 to 67,000 mark was going to be of any significance, which could potentially cause the market to decline? Now a lot of people like proof, so I'm going to give you proof, and then we're going to go into the charts, we're going to take a look, and then maybe just build a little bit of a case about where this could be going out. Now if you haven't already, just remember, liking and subscribing is free, hitting that bell notification is free, and it's no cost to you to get education. So if you haven't already, go ahead and hit the like and hit the subscribe button. Now, as I said, a lot of people like proof. So on your chart, I've got a video that we did back in August 27th. It was titled, Bitcoin, is 33,000 the next move down? Now, if you haven't already watched this video, go ahead and watch it, because a lot of people misunderstand myself, they misunderstand my videos, they misunderstand a lot of the information I give out. Now, this video here was doing a down case for Bitcoin, but as you'll see through that video, I wasn't really saying that Bitcoin was going to go down. I was analyzing a lot of the reasons why Bitcoin won't go down. Now, but the most important thing here, I'll just bring it out, make it its own tab. What we have here is we have these green boxes here, okay? And these green boxes were signaling areas where Bitcoin may find support and resistance, and also we did that for the yellow ones, which were signaling other things. But there was a box up the top here, and it was above the all-time high. So that the box there, this top right here is the old all-time high, and right above that top you'll see that above the 66,000 mark we actually had in another green box. Now I don't usually go out into the future my price analysis. I do have that in some other groups, but publicly on YouTube I haven't gone out into the future on price analysis on where I think price is going and where it could possibly stall. Now I think there was a video that I did accidentally go out quite fast, so it might be in my list. I can't remember if I published it on YouTube or not, but I did detail about 3 or 4 more price levels in the future where Bitcoin may shoot up to and then experience some sort of crash or rejection at that level before it fell. But this level here was important to me because it wasn't the all-time high, so a lot of people thought that the all-time high, when the market came up to this level, so this red line here, when the market came up, it might bounce off it before trying again. And also, not only that, once a lot of people thought that it went above the all-time high, it was going to be blue skies and that we're going to be mooning higher. But what I saw instead was I saw a lot of analysis sort of clustering around the 66 to 68,000 mark, and that's why I highlighted it. So there's your proof. You can go back if you want to that video where you can see a glimpse of it. It's not edited or photoshopped or anything. And now that that's out there, let's move on. So I'm going to open up the Optima charts here. We're going to bring up our Bitcoin research tab. Now there's going to be probably 4 charts we'll look at. We'll look at current price action. So I'll bring up the price chart, then we'll take a look at the cycle, take a look at, the 90-day cycles to take a look at the mass pressure, and then we'll take a look at seasonality, because then I think that'll push us out, and maybe we'll jump into the squares and see what's actually happened. But as we can see, yeah, this is what we were talking about here. So Bitcoin sort of come up to this level here before rejecting. Let's go ahead now and open up our actual price analysis tool, and where we had all those green boxes, so we can actually see what's played out. Okay, so let's squeeze all this up, let's open this up, and as we can see, what we were looking for here is a potential area in price where the market was going to find some congestion, and it was around 66,500 to 67, maybe 7,800, and that was the price area where Bitcoin may fall, just like it did in the past when it ran into these areas here, or this area here, or even where it came down here and found some support to the upside. Now, after Bitcoin had moved higher through this price level, it was pretty obvious that we were storming higher. And whilst I was anticipating, and you already know from past videos, that I was anticipating a bit of a pullback during mid-month, at least a sustained pullback that might have lasted 3 to 4 days and given us around a 15% correction. That was the idea. That wasn't saying, again, go back to the past videos, I wasn't saying it was definitely going to happen. I was saying if you're looking to buy low, then these are the pullbacks you do it on. These are the ones we're looking for, so we can buy low in a bull run. That's how you dip buy, okay? Again, just to reiterate, a lot of other people, buying this dip is good, buying this dip is good, buying this dip was good at the point when it dipped and it looked like a double bottom. Buying this dip is not good, buying this dip is not good, buying this dip was not good, but now we know it was good. So it's all about probability. You see, when you bought this dip here, you didn't know if the market was going to shoot lower, continue to shoot lower, or if it was going to move higher from there. So dip buying is only a strategy that should be used in rising markets and not falling markets, because when you dip buy in a falling market, it's called catching a falling knife, and that's where you keep buying as the price falls lower. Of course, you'll move your averages lower, but it means that you're now missing out on time, and that is important, because this whole period here where you had no gains for at least 3 months, that was a lot of time that you lost. Whereas when you dip buy here, you dip buy here, you dip buy here, and sort of in these moves here, each time you dip buy, your portfolio should generally be biased to the upside and not to the downside, and that's key to these dip buying strategy. Now, I don't use really the dip buy. What I mean is I don't use that terminology. I'm just using it because that's probably what you understand, this whole dip buy terminology. So anyway, let's get back into it. Markets come up, we're on into our price range. Now, from a timing perspective, I'm not going to bring up the time chart because I think I've removed the date for private use only now. We were looking around the 23rd of October. That was one of the key dates. Now, it's currently, as at this point in time, the market topped out on the 20th. It's moved down on the 21st. Now, it's okay if we get a turn date plus or minus 1 to 2 days. Of course, if the market has turned 3 days before, that's completely okay. It's not out of the unordinary. What happened here is that markets moved into a price range, and then from the price range, it's moved lower. And even though we didn't get a clear hit with the time signal, it was close enough that we should be watching it. So here's what I want to see play out, so I can get an understanding of if the 20th was the key turn date that we need to be calculating from in the future, or if the 23rd is still going to be of significance. And if that's the case, then what we want to see is we want to see a bottom form on the 23rd, because that would mean that the 23rd is still an active key date, and we should be calculating from the 23rd out into the future, which means we just don't need to adjust any of the dates for next month and the month after, and then that'll give us a good idea on if the market's bullish. So if we get a low that occurs on the 23rd, so if it just bounces lower and hits another low on the 23rd, then that is an active hit on the 23rd, and the 20th, technically speaking, is a time count hit, but it's more of a price hit. So we can't confirm if it's a time count hit until we either get an invalidation of the 23rd, so the 23rd does not move the market, or if the 23rd does move the market, then I would put more weight on the 23rd than I would on the 20th. So we need to see if we need to realign our time counts or if we're keeping the same. And the only thing we can do now to gauge this is to wait 2 to 3 more days to see what happens around that 23rd. So it's currently the 22nd. Why did I say 2 or 3 more days? Well, again, plus 1 or 2 days. So it's 22nd plus another 2 days. So 2 or 3 days. So we can get an idea. And remember, all these turn dates that I'm talking about, they're all US-based time frames. They're not Australian time frames. But even in saying that, when the market was shooting up super quickly into one of these price points, you wouldn't be waiting also for a time count to confirm. You would just keep an eye on that price point, because there's a very high chance that the price point would cause a reaction. It's just beautiful when they both happen at the same time, because it gives us more confidence that the move down is going to occur. So how strong is the market? The market's still pretty strong. Even if it kept falling even around to this 58,000 mark, or I mean, even if it went down to the 54,000, what percentage is that? Let me see what percent. Okay, so that's 20%. That wouldn't be nice. 15% would be okay. So around this 57,000 mark, 20%, not saying it's not going to happen, I'm just saying if it's anything significant, we need to be looking for our downside. And which, speaking of downside, let's go ahead and take a look at our downside risk. So I've just took on 2 price retracements, and they are using the eighths, not standard Fibonacci numbers. And the first sort of clustering we're getting is around the 56 to 57,000, and the next one is definitely down in this other box, which would be around that 20% decline. Obviously, Bitcoin could find support on this 12.5%, could find support on this 25%, but if it doesn't and it breaks through them, the next strong ones are around here and around here. So let me go ahead and clean up the chart, and we'll just see what happens. I'll just place these on as stronger support levels, so that way we can watch them moving forward. Okay, there we go. So I've just popped them on. Now let me go ahead and delete the original analysis, because we don't need that now. So again, Bitcoin could find support around that 25% level, which was around here. Or if it does prove to be a little bit weaker in the market, and the market is likely to move down or continue to move down, then it could come down to this 57,000 mark. We don't know what's going to happen just yet, but we might be able to find some clues in other pages. But just based on this alone, and if we're using just this standard form of analysis, this is what we'd be looking for. So Bitcoin cycles, let's move into this one because it's been a little while. We are waiting for either a left or right translation to occur on this box here, and then getting an idea on what's going to occur there, we're also waiting for a low to occur in this box here. So we need some sort of major ladder like we've been given lows in the past. Now there was a low that didn't play out just yet. Let me go ahead and clean the screen. And that was a potential low in this time frame here. So that takes us out to the start of November. Now this was a semi-significant low, which I was expecting might fall into that 15% decline, which didn't occur. That's okay because I was experimenting with 2 new cycles here. So if it doesn't play out, that's totally okay. But this one here, it'd be good to see another low play out if it's going to play out. And if it is going to play out, then we'll come within this sort of price range. Now, what does the low look like? Well, this here is a decent low. So that fall there. So let's go ahead and calculate the percentage decline of that. That was a 12% decline. Other lows which have occurred. Obviously, I can't use that low. Those ones. Let's go back, fix this up. So a low in this period here, the market had declined from top to bottom around 15%. So I'm totally okay with those 15% declines into lows. It's totally normal, totally okay. And that's why I put it on the cards as one to be watching if the last cycle was going to play out, which instead of getting a 15% decline, if you could count this as a low, which I probably wouldn't, it was around a 6.9%. So if the market is, and we go back to that 15%, if it is, then that would put us down to around this 57,000 mark. We'll see. That's now 2 forms of analysis where we're trying to find where a low could potentially come in. Again, it could just hit that 25% level, which we saw, rewind the video, and just scoot back up from there. It could do that. Let's go ahead and look at the cycle now. So this is the 2021 cycle. So the market's sort of come up, it's moved down, and it's now looking at this sort of potential hump before it could advance higher from here on out. I have nothing else to say. We're in a bull market. It's clear. Been saying it since July, August timeframe that the end of the year is going to be bullish, more biased and bullish, with a potential September, October period where it slows down. I don't know of anyone why they could confuse this with me being a bear. I'm not a bear. The end is nigh, and we need to jump on this run while it's here. Well, I think I'm on the run. I'm trying to be on this run because I believe that the end of the cycle is going to be huge and I want to be in it. So you can do whatever you want. I'm just trying to interpret all the data and use that to my advantage. Seasonality, as you can definitely see, we're way ahead where we should be for seasonality. Let me go ahead and just clear the screen up and get some live data on here so we can see where we are right now. Perfect, no move. So this is the average. This is where the market's usually turned, and that's based on 10 years of data. So it doesn't take into consideration October in bull cycles. It takes into consideration October based on all the information, okay? And based on all the information, we are way above the average. Now that's okay because it's bull market time, but the average gives us an idea on where it usually sits. So that's a good thing. Now what we can do is we can go back to prior bull cycles to get an understanding of what the average is at that time. So let's go ahead and just pop up maybe 2017. Okay, so in 2017, there were a few declines that occurred in the market. The first one was in January, the second one was in March, the third one was in September. And then for May, August, October, and November, what we can see is if we have our average for May was 162, our average for August was 172, and our average for October was 146. Now, the October average is quite important because that's what we want to look at now. So let's just remember 146. And then if we can compare that to where we are regarding 2017, so just using that as our reference point, we're currently at 137. So 147 would put us up at around here for the month, which means that the market still move higher and still be inside the territory of bull run. So this is the average of all 10, and this is the high of 2017, okay? So let's take a look at the squares, see if we can get any more information out of this run. Let's go ahead and bring up another revolution. And there is not much there because we ran into a 45 degree. Now I used the degrees when I was building the price analysis theory. So I'd already moved my revolutions high. I did bring them back just to keep the chart clean. So around this was 66,500, I believe I put it out, and was another potential for this market to find a top. But this is not a direct hit, so I would put more emphasis on, I put more emphasis on the price analysis, which we saw several charts back, because that's going to give us a greater picture when it comes to building our boxes of where price could move into. So where could it fall if we're using this same very tool? Well, if we use the top and we try to find maybe a 15% decline, that sort of puts us down to this area here, whereas our 45 degree. Though, in saying that, any of these squares could give us a very good and solid low. So if it hits it like it did in the past, like around here, if we can get a solid congestion around one of these squares, I would be comfortable with that. So I'm not going to try and forecast based on the squares right now, mainly because we're still in bull market territory. So my bias is not to the downside. I just want to see a short, sharp, quick decline before we start to move higher. So let's just go ahead and see what happens. I just wanted to give you a quick update, nothing else, give you some ideas on where we could potentially be going. Take a look at the mass pressure chart again. I still think this upside is where it's at. And at least for the next 2 months, I am putting my portfolio on the line because I think that the upside bias is still stronger than the downside bias. But every cycle is different, so we could be proven wrong. We might need to recalculate. So we'll keep going with the market and moving with the market and using what we have in front of us as our major tool instead of referencing the mass pressure chart and biasing everything on the mass pressure chart, okay? So that's all I have. I hope there was at least one little potential nugget of information you got out of this. And if there was, hit the like button. If there wasn't, hit the down like button, the thumbs down. And maybe next time I can put a bit more effort into this video and try and get you some information that you do take away. So there you have it. If you enjoyed it and you want to stick around, subscribe. If not, I'll still look forward to seeing you in the next video. Talk to you soon.